Welcome everyone to the third webinar in our four-part series looking at doing business on the Navajo Nation. Today's webinar is titled, "What could a Navajo banking system look like?" And it's focused on the credit environment on Navajo. My name is Heather Fleming and I run Change Labs in Tuba City. Heather Fleming inisha, bitane nishle, Bilagana Bashichin, Todachini Dashache, Ado Bilagana Dashanella. And I'm joined today by two of our guests, Jessica Stego and Dave Castillo, and also our partners at Causal Design, Raymar and Hannah. So I want to quickly share a little bit more about Change Labs and what we do. As I mentioned, we're based in Tuba City and we're in the business of providing creative workspace, tools, resources, and knowledge for Native American entrepreneurs. And we do this in a number of ways, specifically through 5 programs. And I'm going to go over a few of them with you now. First and foremost, I would say one of the more creative and artistic aspects of what we do is we host a resident designer every year as part of a 12-month residency program. So this year's resident, her name is Mariah Ashley. She's based in Flagstaff, Arizona. And she is a resource to any Native entrepreneur who needs help getting online, developing marketing materials. Mariah, our resident designer, hosts open studio hours twice each month, the 2nd and 3rd Thursday of the month. And if you'd like to sign up for a one-on-one session with Mariah, visit our website at nativestartup.org/events to create an online virtual appointment with her. And next, we also offer co-working space in Tuba City for any of you folks joining us in Western Agency. The co-working studio is just a little nubbin of a space, 600 square feet right behind the Denny's. And inside the studio, you can use desk space, access Wi-Fi, print color documents, and we have a whole suite of marketing tools and equipment available for you to use as well. And then finally, the program that we're probably most known for is our Native American Business Incubator. So each year we select 20 high potential Native entrepreneurs to enroll in this 12-month program. And each enrollee or each incubatee is assigned coaches. They participate in training with their peers. They get one-on-one time with the designer to help them build their branding materials, and they're also eligible for a $10,000 loan upon graduation. So with that said, I wanted to give you all a quick overview of how we're going to spend our time together today. In the first 30 minutes, we are going to share a presentation on the data around the credit environment on the Navajo Nation, and our partners at Causal Design are going to champion that part. And then we're going to segue into a discussion with Jessica and Dave around why the credit environment is the way that it is. And then we'll wrap up with some questions from our audience. You should feel free to type your questions anytime in the chat window, and I'll be intervening as needed to get your questions answered, or I'll queue them up to our speakers. And I mentioned that this is only one webinar in a 4-part series that we're hosting. 2 weeks ago, we hosted the first one that was focused on what it takes to start and to register and certify a business on the Navajo Nation. Last week, we looked at the land issues plaguing the reservation and also what it takes to navigate construction permits and getting electricity for a business. And next Tuesday at this same time, we're going to talk about if someone is able to achieve all those things, certify, register, get a space to do business, then what barriers do they run into when they try and grow their business? So we're going to look at the day-to-day operations and the challenges that most entrepreneurs face when running a business on the res. All right. And with that, I'd like to hand it over to our long-running partners at Causal Design to explain a little bit about what they do and then to step us through the findings on the credit environment on Navajo. So Hannah and Raymar, take it away.
Thanks so much. Thanks so much, Heather. Again, my name's Raymar Makaranis. I'm one of the co-founders of Causal Design, and it's good to be back for this discussion. As Heather mentioned, and as I've said before in the previous presentations, Causal Design is a research firm. We primarily work to conduct economic and impact analysis to help organizations like Change Labs improve the lives of members of their community. Now, for the past couple of years, we've supported Change Labs and their team in setting up systems to both measure and understand their impact on the small business community. Today's discussion will be, I'll find very fascinating. It'll be a discussion around credit markets and financial access. And it's really a prime example of how sometimes the rules and regulations around starting and maintaining a business might be very disconnected from kind of the reality facing people in a community. Hannah, who I'll hand it off to in just a second here, will talk more about the evidence that we have around kind of the infrastructure, but also, just as important, we'll have a discussion with our panelists about how this reality plays out in the lives of entrepreneurs. So with that, I'd like to introduce my colleague, Hannah Pruitt, to discuss the findings of her work.
Great, thank you so much, Raymar. Hi, everyone. My name is Hannah Pruitt. I am a research analyst with Causal Design, and I've been with Causal for about the last year. And during that entire time, I've been working with Change Labs on this research project. So it's really exciting for us to get to share some of our findings with you guys today. Change Labs and Causal have been working together for the last, 3 or 4 years, but Change Labs work on Navajo Nation goes back far beyond that. For the last 5 or 6 years, they've been working directly with the Native entrepreneurial community on Navajo Nation. And through their work, they've collected a lot of stories about what exactly makes doing business on Navajo Nation so difficult. And after years of collecting these anecdotes, they really wanted to elaborate on this question of why is it so hard to be a Native entrepreneur on Navajo Nation. And they really wanted to back it up with evidence and have specific data points to draw on whenever they're discussing this issue. And so they brought this question to us at Causal, and we propose to answer it with something we call a doing business analysis. Doing business is a methodology piloted by the World Bank. They've conducted it annually for the last 17 years in 190 countries across the globe. But really at its core, it is a tool for understanding all of the different factors that a business owner would need to consider whenever they choose to start, operate, and grow a business. So what exactly does doing business measure? Essentially, it takes a hypothetical business, or what we call a case study business, and it moves them through all of the phases that are all the different steps that a business would need to complete in order to open and operate a business. So this begins with opening a business, starting it, incorporating it, or registering your business, getting all your tax accounts set up, all of these things. What we discussed last week, getting a location, so accessing land, dealing with permits in order to build structures on that land, and getting those structures connected to electricity. Next, it looks at the credit environment, or accessing finance. And lastly, it looks at paying taxes and enforcing contracts, which is completing day-to-day operations and being sure that you're operating in a secure business environment. And it measures these things along 4 different dimensions. The first of which is complexity. So the number of steps, or what procedures would you need to go through in order to accomplish just one of these different indicator sets. So if you wanted to register your business, how many different steps would you need to go through to complete that? Next, it looks at time, or the number of days it would take to complete one of these procedures. It looks at the cost of completing something. So how much would a business owner need to pay in permits or fees in order to register their business or access land? And lastly, it has an aspect that looks at the quality of regulation, or it really tries to benchmark if certain regulations that we know are supportive of a business environment or are supportive of a business owner, if those are in place in order to facilitate beneficial business activity. And together, we think that these 8 different things really build into the business environment, or all of the different factors that a business owner would need to contend with in order to operate their business. And today, as we've alluded to, we're going to be discussing the credit environment, or what it might take to access finance on Navajo Nation. And whenever we started this research, we knew that we wanted to complete it on Navajo Nation. We wanted to benchmark what the business environment would be. And we chose Tuba City, where Change Labs is located, and also Shiprock as another comparable chapter in a different state system. But where we thought we might glean the most insight is comparing not just the business environments between these 2 chapters, but also comparing it to an off Navajo comparison point, or a border town. And so we looked at the business environment both on Navajo and off Navajo in Cortez, and did the exact same analysis so that we can really compare and contrast where it might be the most difficult, or what those pain points might be for Native entrepreneurs. So before I dive into the findings, the credit environment indicator is a little more complex, or it's measured a little differently than our previous presentations, in that it focuses entirely on the quality of regulation. It asks the question, does Navajo Nation have the rules and regulation in place that support a vibrant credit system? So is there a regulatory framework that should facilitate lending? Does it make it easier for borrowers to borrow and lenders to lend? So whenever it measures this, it looks at the regulations that support potential borrowers. In this context, it asks what kind of collateral can be used. Does the system make it as easy as possible for potential borrowers to access credit? So can they use things outside of just immovable property like land or houses, and can they use movable property like tractors or equipment? And if they can use this, can they describe it in general terms, so it makes it very easy and accessible to use this type of collateral? It looks at the protections for potential lenders. So it asks, are creditors secured in the event of a default? So it measures things like, if there is a default, in what order are creditors paid out? Would the state or the central government be paid tax claims or labor claims before the secured creditor is? And lastly, it looks at the collateral registry. So is there a central system that essentially serves as a central hub for registering when things are used as collateral? And is it accessible for both borrowers and lenders? So are borrowers able to register the things that they use for collateral, and are lenders able to keep a catalog of these things so that they can better manage and maintain their loans? So with that discussion, I'll dive into our findings. And essentially it serves kind of as a checklist to see if certain protections are in place for each of these 3 sections. So when we look at protections for potential borrowers, we find that Navajo and Cortez both have the 5 different protections that we would expect or hope to see for a vibrant credit environment. When we look at the protections for a potential lender, Cortez comes across at having all 4, whereas Navajo has 3 of the 4. And lastly, looking at the collateral registry, Cortez has 2 of the 3, whereas Navajo is 1 of the 3. So when you aggregate all of these up, you find that Navajo has 9 of the 12 protections measured by the credit environment, while Cortez has 11 of the 12. And I previously mentioned that this analysis is completed in 190 countries across the world. And that means that it looks at these same exact regulations in 190 countries, and we're able to compare one credit environment versus another. And so whenever you look at this, we find that New Zealand has the most protections in place, or it is the easiest place to access credit. Cortez comes in at number 3, the US at number 4, and Navajo Nation actually isn't far behind at number 13. And I'm sure for all of you, as it was for us, this is actually pretty surprising because from the stories we hear from our entrepreneurs and the lived experiences and all the anecdotes that Change Labs has collected, you know, we have heard that it is quite hard to get a loan, to get a business loan and access credit whenever you're operating a business on Navajo Nation. And so it led us to dive a little deeper and ask, you know, if Navajo Nation has a quote unquote good credit environment, then why do Navajo businesses still struggle to access finance? And that kind of took us back to the drawing board. And we find that while the methodology that we originally used asked the question, does Navajo Nation have the rules and regulations in place? It really should have been asking, are the rules and regulations implemented well for the needs of the people within that credit system? And we think that this is really what the doing business methodology misses, and why we're really excited about the conversation on the panel today, because we think it will really fill in some of these gaps. But in our analysis, we did reach out to some auxiliary research and try to see what kind of questions and answers already exist for this question about the system being implemented well for the needs of the people. And we came up with a couple of reasons that we think that still inhibit credit access on Navajo Nation. First of which is the lack of collateral. For example, this methodology looked at immovable property. So it looked at if you can use, or sorry, it looked at movable property and completely excluded immovable property. So things like land and homes. And as we know, it's quite difficult to access loans whenever you don't have a lot of collateral. And it completely misses the fact that Navajo entrepreneurs don't have private ownership of land most times and aren't able to collateralize that. And there has been some effort to collateralize land leases, but because they're so special and not a vehicle that's used like widely across the banking system, a lot of banks don't have the ability or the I guess special skills to be able to appraise these and use these for collateral. There's also a secondary aspect that we looked at that is, you know, banks just perceive native borrowers to be as high risk. And we think this comes from years of systemic exclusion from the system. It could be due to discriminatory practices or perceptions of native borrowers that really don't lead to facilitating a lot of credit on tribal lands. And because of these two things, and is kind of compounded by the fact that there just isn't a lot, or there just aren't a lot of banks on tribal lands. Now, there was one analysis that we looked at, and I think it was completed sometime in like 2014, so it's a little outdated, but it found that there were only 7 banks or lending institutions that service Navajo Nation, and 6 of the 7 were in border towns. So whenever you have to drive that far to access lending opportunities, it creates an incredible constraint on accessing credit. And so to close, you know, it comes back to this idea of if the rules and regulations are implemented well for the needs of the people within that system. And I think through going through all of our research and discussions with Change Labs, it led us to think about, you know, is the traditional banking system or lending system really suitable for Native borrowers? And that is what inspired the title of this session today, is what could a Navajo banking system look like? And you know, if this traditional system isn't working, then how can we build a system that does work? And that's what we're excited to get into today. So before we transition to that, I did want to leave some room for questions from the audience if you guys have anything specific about the data or the research or the methodology that you guys would like to ask me or Raymar. So with that, I'll open it up.
I see we have
Hi.
a question from Derek Watchman from the Diné Chamber. And Derek, you can either unmute and ask your question or type it in the, there we go.
Great. Thank you. Can you hear me? Thank you, Yate. You mentioned the system and collateral as possible, I'll say possible, impediments to extending credit. Was other factors looked at as well? You know, when I hear what you're saying, it reminds me of, you know, the market and the demographics on, especially on Navajo, are, I'll say, weak. You know, it's hard to produce a reliable pro forma. You have the tribal court system, and there's, you know, a whole host of other things. And so beside the two variables that are presented here, were other factors looked at and considered in this particular topic?
Sure, yeah. So outside of just, I guess, specifically within the credit sector, you know, we looked at protections for borrowers, protections for lenders, and the existence or certain features of a collateral registry. But I think what the doing business methodology tries to get at is it tries to look at the business environment as a whole, with the understanding that these different factors do feed off of each other and influence each other. And so what we'll present next week, and as you mentioned, is looking at enforcing contracts, which I think plays a large role in the lending environment. You know, lenders or institutions are only really willing to lend if they know that their loans are going to be able to be enforced, or if they enter default, if they're going to be able to recoup that investment. And that's heavily related to the judicial system. And what we found is that the tribal court system is significantly slower, or, you know, can cost a lot more than maybe a system in Cortez or in border towns. And we think that might influence it as well. Raymar, I don't know if you have anything else you'd like to add.
Yeah, no, the only thing would be that, right, you know, that is an aspect of it and will certainly have an issue for the overall environment. I think what we, or at least what the methodology tries to do here is, you know, tries to get at what rules are in place and should the rules be facilitating, right, good credit function. And I guess on its face, it seems to suggest that yes, that ought to be the case. But, you know, we can think of a whole host of reasons why that may not be the reality. And, you know, like Hannah mentioned, tomorrow's discussion around contract enforcement is going to affect a whole range of issues, from starting a business, you know, getting partnerships and investors, all the way through, right, to financing and maintaining and growing. What the methodology tries to do, right, is, you know, it isolates for different kind of dimensions and just tries to, you know, take the temperature and say, if we were to just isolate these four, can we say something about the health of the business economy? And can we get a benchmark to then understand, right, are there improvements later on? And so by, say, you know, isolating that this is the health or I guess status of regulation now, what it can help policymakers kind of think about is, well, you know, we shouldn't necessarily be focusing on our efforts on maybe improving the regulations that are in place, but instead maybe prioritize them towards other areas that make more sense. And you know, part of this discussion is helping hone that, so that organizations like Change Labs can know, okay, well, where do we put our time and effort, right? Is it in educating the entrepreneurs about what the rules are, or is it more about giving lenders more tools for better assessing, right, native borrowers? We don't know. I mean, that's part of the discussion. But yeah, that's all to say that, you know, we recognize that in some respects, right, this question and the kind of the focus of this methodology is really superficial, but we don't want it to just end there because it doesn't tell us enough. And we're going to continue to do this type of research, continue to engage with folks like Change Labs and people like those on our panel to help kind of get at, you know, what are the important takeaways.
Thank you.
Right.
Could I ask another question? You don't have to answer it, but another thought is you mentioned 150 plus other countries that were considered in the data pool. Were other tribes considered? And is because there's 570,
Yeah.
the number keeps changing, but 576 federally recognized tribes, and so I'm curious about the rest of the Indian nations pool relative
Mm-hmm.
to the other countries, and so
Yeah.
you don't
No.
have to answer now, but I'm just curious as to whether or not that whole aspect was taken into consideration.
Right, right. No, for our understanding, this is a test case in
Okay.
in all senses. It's a sort of a proof of concept. We wanted to see, could we do this for the Navajo Nation? Is this something that can be extended, right, to other tribes? I think there's a lot of there's going to be a lot of issues in maybe expanding it to a lot of different areas. Navajo Nation, right, provides a really good example where you do have a lot of those pieces in place to where we could really look at it and understand what this ecosystem looks like, right, and how it functions. But yeah, no, it's the first of its kind as far as we know, kind of on this sub-national or
Thank you.
level. Mm-hmm.
Thank you.
Okay, we have a question from Kent Curtis at First Southwest Bank. Kent, if you could just unmute yourself and share your question.
Sure. Actually, kind of more of a comment, but I was just going to mention that I am a banker with office from First Southwest Bank. We have office locations in some of the border towns. So I just wanted to say that I think Hannah's information is spot on in what you've revealed so far. So I'm going to be interested in hearing the fixes that you're going to be talking about. Because there are issues, and it would be great to get a better understanding and hopefully change some of those things. So, because we definitely understand that, by the way, we're also a CDFI bank. We understand that credit is difficult in Navajo Nation. We need to figure out how to make that better. So this is great. Thank you.
Just a quick comment to that. One of our goals, right, is to really think about, well, what would a native-led solution look like, right? And part of the brainstorming is to hopefully get some feedback, understand, well, what has worked, what types of lending are more appropriate, what makes more sense for the community to, right, account for the specific circumstances about what it means to own land, what it means to do business on the Navajo Nation. And so, we're really excited to engage in this and hope that we can continue this this conversation after, even after this presentation.
Any final questions? Going once? Going twice? Okay, we're going to move on to the discussion portion of today's webinar. And for that, we have two special guests with us today. One of them is a little bit of a cheat, Jessica Stego, because she's also on the Change Labs team. But within Change Labs, she spearheads our microloan program, Kinship Lending, which is part of the Co-op Capital program with New Sender Credit Union in New Mexico. And I'm sure Jessica can give you all a little bit more of an introduction to that. And Jessica also previously served as a board member for Navajo CDFI. And then we also have with us today Dave Castillo of Native Community Capital. Dave is a long-running friend of Change Labs and is one of our go-to experts and advisors for all things related to financials and financial access. So we're excited to have both of them with us today. And I'm going to hand it over to my colleague Jessica to lead the discussion.
Thank you, Heather. And also thank you to Raymar and Hannah for kind of going over that information. Jessica Stegunja, but Aniashle, those of Gan Bashashin, Ki Ani Dashache, those of Gan Dashanale. she basically didn't nasha ado change labs a shinamish. I am Jessica Stego, and my clans are Folded Arm. I'm half White Mountain Apache. My maternal grandfather was Kia'ani, and my paternal grandfather was also White Mountain Apache. I live in Winslow, Arizona, and I work for Change Labs. And I just want to welcome Dave to the discussion. Dave Castillo is the CEO of Native Community Capital, as Heather mentioned. And we are just going to, talk a little bit about the discussion that's already started. I think it's interesting that people are beginning to say, okay, if there is an environment, a legal environment for lending, then what are the problems and how are we missing? How is the banking industry missing the needs of the community? And so I think that Dave has a lot of experience in that area. So I think it's really important in this part of the research because it provides some clarity, as Raymar was talking about, how it kind of isolates certain aspects of the lending environment so that we can really focus on on where we can, what levers we can push to make investment more available to Native entrepreneurs. And we know, I just wanted to mention that we know there are other challenges. We know that there's a lack of collateral. And so we want to isolate that as well. And that has to do with other indicators that you find within the economy. And part of this research that's also really important is that it highlights all the different things that communities could be working on and thinking about. It's not just one single thing that's going to create a robust economy. It's looking at it as a whole and working together as partners as institutional partners, as community partners, as entrepreneurs, as people in the community who care about the economy. Everybody has a part to play in this, and so I think that's really a good point to discuss in terms of, what can we do and what do we do with this information? So now that today we just want to talk a little bit more about the changing environment for lending and investment into Native entrepreneurs, and also a little bit about what potential borrowers, what their needs are and what they can begin to do to position themselves to take advantage of what is available and what's out there. So Dave has been, as mentioned, with Native Community Capital, has been probably one of the longest running lending institutions that are actually doing loans on the reservation. So Dave, since the research shows that the Navajo Nation does have the legal protections for creditors and for borrowers, then it would seem that there would be a robust lending community or a robust lending market on the reservation. And do you feel like that's the case?
Yeah, thanks. Hi, everybody. Yeah, thanks for that question. And first of all, just kind of clarification, we've been lending on Navajo and other places, but I think it'd be better to say longest mission driven, lending institution as opposed to kind of a regulated bank, because there's certainly been a number of those. But I think it really goes to the heart of the question, right? Because the name of the session is, what could a Navajo banking system look like? And so your question as to, do we have a robust lending environment? There's a few different ways we can answer that question. I mean, just right off the top, we could say, yeah, there's a lot of lending going on, but it's not the kind of lending we want, right? It's not the kind of lending we know is healthy or useful for building tribal economies, right? We've got more payday lenders operating, around the Navajo Nation, I think, than anywhere in the country, in comparison to other tribal lands. The rates that they charge are, up to 700% if it's annualized interest. And you've got to ask the question, what's drawing them? And part of the answer is that there's a demand for that kind of lending. And so it is, you've got to look at this more holistically, right? As you said, Jessica, it's not just, is there money out there? There's tons of money out there, but can we get access to the kind of money that we need? Another question that Derek asked about, what about other tribes? Well, Eagle Bank is operating up at Salish Kootenai. Bay Bank is serving Oneida. Chickasaw Community Bank is out there in Oklahoma. Native American Bank, who I think is on this call, is serving, tribes and tribal members throughout. You got Lakota funds in South Dakota, et cetera. And even non-unions, right? We got Arizona Business Bank, Bank of Oklahoma, First Americans Credit Union, Bank of the West. There is a long list of lenders that have made loans or would think about doing loans on tribal lands. But again, it's not, when you compare those types of banks, which could be considered more conventional, right? And by conventional, I mean, the types of loans that an average middle-class American could get with rates that are reasonable, that are not considered usury, right? Once you get up to that 20% mark, we're really talking about some extreme interest rates, and might as well use a credit card, right? And then certainly when you're looking at predatory lenders charging 700% annualized interest, there is a robust lending market on Navajo, but it's not the kind that we want. I think any reasonable person could say that's not what we want, that's not what we deserve, and that's not what a Navajo banking system should look like. So I think that's really the key. And then if you go from that point and say, okay, we've got money is flowing through the Navajo Nation, whether through informal kind of exchanges, whether through like the kinship lending system or a program that you have in place, which is very good. That gets closer to what we want, right? There's even another one called the Matriarch Fund, which will forgive half of the loan. Those are getting closer to what we want. And then it's paired with technical assistance. Again, that gets even closer to what we want. But I think we need to ask the question, if we're trying to imagine what could be, we start with the question of who are the parties and what do each of them need, right? So on the lending side, then, who are we really talking about in terms of the lender? Are we talking about a mission-driven lending institution like us? I mean, we're a nonprofit. We're essentially an online lender, and most of our money comes from foundations and others that have an interest in seeing social change happen. Or are we talking about a private sector conventional lender, which is has investors, is probably publicly traded, and has a regulatory infrastructure that they have to that they're beholden to, which would restrict the kinds of things they could do. Or are we talking about predatory lenders, right, which is just total ROI and somewhat unconscionable? Or are we talking about maybe a government-sponsored entity or lender, maybe something that is working, is operating under the auspices of the Navajo Nation? So there's a lot of different kind of ways we can take that question in terms of, do we have kind of a robust lending environment, and why or why not? And I think the answer is embedded in that. Well, what kind of parties are at the table? How many mission-driven lenders do we have? A handful. How many private sector conventional lenders do we have? Actually, a fair amount. And then predatory lenders, way too many. And then government-sponsored entities, there's a few. The next question that you ask after that then is, what is their appetite? And that's one of the questions, or one of the some jargon that you'll hear in the banking environment a lot, is kind of what a lender's appetite for any kind of transaction is. And that gets a little deeper into what a bank or a lender is willing to do and when. But it has a little bit to do with what kind of lending, right? So we're talking about commercial loans for large tribal enterprises versus mortgage loans versus small business loans versus micro loans. Those are all different kinds of specialties within the lending environment. And there's a ton more beyond that, especially if you start introducing things like private equity and venture capital, et cetera. So there's a lot embedded in that question that you asked, Jessica. And I think the place to go with that then is to really start with the client, the borrower, the people that you work with, right? And to say, okay, where are we really at? What do we need? And what kind of lender do we want to attract, to work with us? I think you start there, because if you open it up to outside and just say, hey, we've got the regs in place, please, come to Navajo Nation and serve us, you may get more than you bargained for, particularly if you think about it in the context of a predatory lender. So I'll leave it there for now. There's a lot more to say.
Thank you. I think that the research show that, we did kind of open it up. When I say we, I mean the Navajo Nation opened up their environment, their credit more for, what was attracted, which is more predatory lending and more payday loans. And I think that that's kind of where we are today. So I'm glad that you mentioned that, because that's sort of the setting of what we're trying to work with in trying to provide assistance to Native entrepreneurs. And I think that let's kind of, get a little bit more in detail about where we can go from here. So one of the things one of the tools we want to use for the discussion is some poll questions that we have. So I'm going to ask Heather to go ahead and post the first question. If everybody could respond to that, and then we'll get back to it in a minute. The second question I think that we could talk about is, Dave, you and I are Change Labs and Native Community Capital are part of the Co-op Capital program that Heather mentioned. And it's partnering with Nusenda Foundation in New Mexico, as well as some other partners with Roan Horse Consulting. And the program is basically a relationship-based lending program where we don't have to, it's the program we use to launch our kinship lending. So when we launched kinship lending, we took applications and we made decisions about who we were going to lend $5,000 to based on a relationship with the business versus looking at credit or pulling credit reports or credit scores. And the relationship-based part of it is, we went into the communities and said, hey, you're doing business with this company based on references that the company provided to us. And we made decisions, we got the information we needed, and we made the decision whether or not to lend to them based on that. As you mentioned, the mission-driven lenders, which you're part of that community, what's changed in the past few years, before COVID, but also what do you see, where do you see the trends going post-COVID from here with respect to mission-based lending and what might be available for entrepreneurs? And then we'll get a little bit into the borrowing side of that.
Yeah, thanks. In terms of what's changed pre-COVID and post, timing is everything, it seems. Pre-COVID, I'll just tell you a story. One of the first deals I tried to do, a tribal deal that I tried to do when I was at the bank was, it was a what do you call it, a peach of a deal. It was I think my underwriter, someone called it a cherry deal, right? Like it was just a really, it had all what we thought we needed. We took it to underwriting and they kicked it back and they said, yeah, it's our credit box is just a little too tight. I don't think we're gonna be able to do this deal. And then 6 months later, as we got close to the end of the year, that same underwriter called me back and he said, hey, remember that tribal deal that you brought to me? We want to do it now. And I said, wow, that deal's long gone. The tribe ended up financing them for like at 1%. It's just a no-brainer. It was a strong deal. And what had happened at the bank was that they hadn't made their numbers for their Community Reinvestment Act. What the regulatory body for the banks basically says you must do to stay in compliance with the Community Reinvestment Act. So the timing was a big factor there. And I think that pre-COVID is what was driving a lot. Remember I talked about appetite? Well, what contributes to a lender's appetite? In this case, it's the bank's regulatory agency forcing them to do something, right? That increases their appetite for tribal deals, because earlier in the year when they weren't so worried about making their numbers, they didn't have very much of an appetite, but the closer they get to the end of the year, all of a sudden they do. Kind of like when you go buy a car, right? You know, if the car dealership hasn't made its numbers that month, and you hit them at the end of the month, they're very, very motivated to sell you that car, right? Same kind of concept. And I think pre-COVID, that's a lot of what we saw. And then, you know, just the changes in the environment, right? All three of the big banks had native commercial lending teams, and some had residential lending teams, right? That meant that those three banks, the big banks, the biggest banks, had an appetite for making loans to tribes. Well, where did that come from? Well, this was, you know, after IGRA was signed into law and tribes were putting up casinos, or there were other tribal enterprises, sand and gravel, you know, oil extraction, mineral extraction, and they were very motivated. And banks were doing deals with tribes all over the country. So that in and itself tells you, you know, can money flow to tribal lands? Of course they can. Those banks were doing tons of business, and then things changed with the recession, right? So I think pre-COVID, you know, it was this question of, you know, what kind of investors can we attract to Indian country? Well, the answer too much of the time was it depends on what the ROI is for the lender, right? What's their return on investment? If it's gaming with a huge, with that, you know, is able to see huge margins, profit margins, then very attractive. If you're talking about small businesses for loans under 50,000 or micro loans, you know, at 10,000 below, not so attractive, right? So it was just kind of a question of what was going on. In New Mexico, the payday lenders got beat up about the rates that they were offering. And so again, kind of someone came in with a stick and things changed a little bit. Now, post-COVID, I think is very, very interesting. It's kind of like there was someone from one of our colleagues in the South in the Mississippi Delta said, we've gotten more attention from the big banks or from any banks within the last 4 months than we have in the last 4 years. Well, what's changed, right? Obviously, COVID has laid bare the you know, tremendous inequality in terms of access to capital for not just natives, but, you know, folks in Appalachia and the Mississippi Delta and inner city. And then we've got the you know, Black Lives Matter movement. You know, you got coaches like Pete Carroll speaking up and saying, hey, something's not right here. A bunch of really prominent white people saying, we got to change something. And then on top of that, you've got the prospect of Senator Warren possibly becoming the next Secretary of the Treasury. Now banks who didn't previously have an appetite for working with tribes or doing deals on Indian land are thinking, you know, we better get it together here. We better show that we're invested. And all of a sudden, there's tons of cash that, you know, seemingly out of nowhere is becoming available for organizations like ours and, you know, Change Labs and others who are looking to work in Indian country, or who have been working in Indian country for a long time, I should say. And of course, you've got new players. They're like, well, shoot, you know, we can get in on this as well. So post-COVID, I think is really, I think going to be really, really interesting, and I think that behooves all of us, you know, sharpen our pencils to build our own capacity and to ask those questions. What do we need, right? Because if we're not careful, we're going to get folks that are going to, and they're going to anyway, going to try to exploit the situation, going to try to exploit tribes further, going to try to exploit, you know, native people, right? Right now, if you want to get a loan for your single wide trailer, you can get it, right? You're going to pay through the nose. But we should have other options. And I think that's what we're talking about now. What can we build in this post-COVID environment that makes more sense, that is more driven by what Navajo needs, what Navajo people need, and demand that. So I think really interesting times. We're looking forward to it.
So let's talk about this from a potential borrower's point of view. And I'm just going to ask Heather really quickly if she could do the second poll question. So just to kind of recap, mission-based lenders are more concerned with social impact, meaning how many, you know, meaning trying to meet the needs of the community and not necessarily doing it, you know, with a stick from a regulatory standpoint, but looking at what the needs are and trying to meet those needs in order to do things like, you know, alleviate poverty, or some of them are interested in climate change and looking for solutions there. Food sovereignty is also another big issue that impact investors want to have, or impact, those concerned with impact, with social impact, are looking at providing solutions for. So from a potential borrower's point of view, because I think that a lot of Native entrepreneurs are hesitant to take out loans. At least that's been our experience. Um, you know, and there's also a lot of grants that are being available. So why would you, you know, take out a loan if you can get a grant? So that's also something that's really specific to the COVID era that we're in right now. And I think the grants are good because they are helping to sustain businesses and helping to keep them, you know, helping them to survive. But from here, what would a potential borrower need to do now to make sure they're ready for this influx of investment that seems to me, as well as what you just described, that it's going to be available post-COVID. You know, people want to see Native communities and Indigenous communities rise up to meet the challenges ahead of them, both with climate change and also with creating their own economies and their own local economies, and relying less on, you know, large industries that they once were beholden to. So what should we, as, you know, technical service providers be concerned with, but also what should the business owners be looking to do to position themselves the right way?
Yeah, I think there's two answers to that question, right? Because we've already established that we've kind of got, you know, the system that we inherited, which is conventional lending based on a regulatory framework, and where return on investment is the basis for that activity, right? If you're thinking in that world, and let me just mention, there's an old book called Banker to the Poor by a guy named Muhammad Yunus, I think. And he talks about these two systems that exist. He talks about a greed-based economy and a relationship-based economy. And the world over is dominated by a greed-based economy. And so those who want to establish systems and resources and financial institutions and economies and markets that are based on relationship need to kind of build that system alongside the greed-based economy system. And so that's why I say there's two answers to this question. On the greed-based system, which we just call the conventional lending system, which is part of the capitalist system, which we're all a part of, you know, I think the answer is the same as it's always been: is get your back office in order. Most businesses that we've seen fail in the back office. And what I mean by that is, you know, the artist, the artisan, the guy who or gal who drives a backhoe or a dozer, or, you know, heavy equipment, or maybe they're a contractor, they do plumbing, whatever it is they do, they know their craft, they know their business, they know their art, right? They can do that, and they've been doing it sometimes for generations. A lot of time, most of the time when these businesses fail, it's not because they don't know their craft, it's because they haven't paid maybe payroll taxes, they haven't really looked at the books, and, you know, all the revenues flying out the back door because of other obligations that aren't consistent with I think the performance of the business in a way that a banker would expect it to perform. Right? It's kind of like when you look at the financial statements, if you can produce financial statements and something looks a little off, then we start asking a bunch of questions. What's going on here? Right? And so in terms of what you need to do, if you want to, if, you know, and I think a lot of us need to kind of be aligned with kind of the conventional lending environment, it really behooves us to make an investment of time and a little bit of resources to get your accounting in order. So we can use a Schedule C to kind of look at your business's history, but we also really need to see, you know, past and current financial statements. And by that, you know, if you don't know what a financial statement is, right, I'm talking about, your P&L, which shows your actual revenue and expenses, your balance sheet, which is looking at your assets and liabilities, and the way that the funds are flowing through the organization, or a cash flow statement. So, and in addition to that, we need a realistic view of how you expect your business to perform over, let's say the next 3 years via, again, financial projections in that format. Now, that's not something that the average business owner, especially if you're fairly small, are going to have a lot of command or knowledge of, but that's okay. You don't need to. You get all your paperwork and your receipts and whatnot to an accountant. And the idea is that you work with them very closely, not so that they can do the work, right? They can do all the number crunching, and they help you understand what those numbers mean. Because, if you've never looked at like your credit report, if you look at your credit report, like, I see what's happening. I didn't even know that medical bill was on there. Same thing. If you never look at your financial statements, you might not realize, I should probably do something about the pricing of my product, right? Because here's what it costs me to produce it. Here's what I'm charging for it. And, everyone else is charging this much more, and it's reasonable to do that. But you won't know unless you look at how your business is performing on paper, in terms of the numbers. All kinds of different things happen, right? Your business may be seasonal in nature, and you can really see kind of the ups and downs and how big the change is and where you can make some changes in your business so that you don't get hurt, as the fluctuates. And then also, like I said before, the accountant can help with, I think I mentioned this, with staying current on your obligations, such as taxes. And this is a big one, okay? Because any delinquent federal debt, meaning unpaid taxes, makes your business ineligible for any of the federal guaranteed loans, such as the Bureau of Indian Affairs Guaranteed Loan Program, which is something that we offer. If there's delinquent federal debt, we just can't help you with that product, and that's the main product we use. So again, on that side, on the kind of the greed-based economic system, you want to have all your numbers in order, because no one's just going to trust you. They're going to have to verify everything. If we're talking about the other side of it, the relationship-based lending model, which kinship lending is part of, then it really behooves you to kind of come together as a community. There's things like lending circles. There's things like Kiva, which is it's not a Hopi thing. It's a online lender that's kind of crowdfunding. And in that sense, you really want to be able to tell your story. You want to be able to say, hey, this is what I'm connected to. These are the people. This is the community. This is how we work. And an investment in me is an investment in us. So there's that side of it too. There's not as many of those, or there might not be as much money in that realm as there is on the greed-based system. But nevertheless, if we're talking about building something that works for Navajo, and we're really visioning and imagining what can be, I think you probably want to do a little bit of both.
Yeah, I'm glad you mentioned the financial projections in that, and what type of information entrepreneurs can get from that. Because I find that when I do projections with a small business, even if they're a very small company, if they're just a solopreneur, they might even be doing their business part-time. But once they realize what it takes to make the business work, what type of sales numbers they need to hit, how much work that's going to be, if it's something that they make, if it's a product that they make, or, if they're a food stand and they go out how many, once a week, and they realize, wow, to make this work, I have to do this at least twice a week. Those like hard numbers in terms of what is it actually going to mean to me to look at what my business numbers are, and how do I grow my business based on that information. I think it's really helpful to most entrepreneurs, and I don't think that a lot of them realize that until they actually see the numbers. So it's always amazing to me to hear their responses once we have their financial projections done. So really important to get that done, as well as to track your numbers. I think a lot of companies, they track their expenses because they know that has something to do with their taxes, and that's sort of the extent of their bookkeeping. But we really, and having businesses look at doing their bookkeeping and their financial projections and paying attention to their numbers is definitely one of the hardest pieces of knowledge building and capacity building that we experience at Change Labs, but we've tried to, you know, find different ways to do that. So it is so important. Just
so here's an example. I'll just mention something. You know, that's always an issue, particularly in, you know, distressed environments. There's a gal in Hawaii who was kind of confronted with the same thing, and what they did, you know, because what was happening basically, you know, in Hawaii, it's kind of like, you know, in the Pueblo communities or Navajo and Hopi and places like that, where there's some real obligations, right? When you introduce yourself, you know, with your clans, that means something, right? That means I'm obligated to honor and recognize that relationship I have with you. And in Hawaii, they were saying it's very strong, right? And so it's not considered, it's considered appropriate for someone to kind of go in and say, hey, you're my relative, I need this, you know, can I take it, or I'm gonna take it, right? And a lot of the businesses, the Hawaii-owned businesses, you know, were like that. And so they said, well, we've got to think about something different. Why don't we kind of take all these native-owned businesses under the umbrella of a co-op, right? So that when your relatives come to you and say, hey, I need this from your store, they can say, you know what, that's not mine to give you, this belongs to the co-op. And so what they did on an annual basis is they brought the community together and said, look, this is the revenue that was generated from our businesses, our co-op businesses, and you decide how we use it. And so they would say, you know, we need something for our elders. Okay, we're going to take 30% of the revenue that came off of these businesses, and we're going to dedicate it to our elder programs, and then youth programs, or, you know, domestic violence, you know, whatever it was. But it basically allowed them to honor the needs that the community members were saying they had, right? Same thing, we visited with one of the Pueblo communities, and they say, look, you know, it's just, we have this thing, I don't remember what the word was in their language. They said, there's this thing that when the clan leaders ask for this, you know, we're obligated to give it to them. And so I said, well, you know, just because we're under this system doesn't mean you can't do that. And we might just have to translate it. Maybe you establish kind of a reserve fund, right? And that's what you call it in your accounting system. This is you know, use your own language, or use a Biligano word and say, this is the X fund, right? And these funds are to be used for this purpose. So that way on the Biligano side, it looks good, we've accounted for it. And on the traditional side, you're able to do what you need to with that. So I think the big issue here that, you know, the elephant in the room that we're not talking about is the money demon, right? If you ask anyone, you know, especially people from tribal communities, what is your first memory of money, right? A lot of times it's not a happy memory, and that thing sticks with people. And so one of the things that one of our friends, Jake, does out there with the Pueblo communities is they do this financial literacy business basics class, and they bring everyone together and they do a feed, just like, you know, they tend to do in Pueblo communities. And so the whole idea behind that is that we're coming together to talk about money issues, but we're going to honor you and our relationship with you by giving you something, by feeding you, and starting the conversation off that way. And they have a curriculum. But the point is that sometimes they put the book aside and they say, you know what, what's really bothering folks right now is that, you know, a couple people in our group right here have some serious money issues because, and you can name your crisis. Okay, I'm not going to try to bring any of that into this forum right here, but people have a need for money, and let's talk about what's going on there first as a community, as relatives. And then we could talk about what kind of strategies can we put in place to kind of get out ahead of this when these kinds of things happen, because they always happen, right? So again, I think that's one of the things that if we just look at the numbers, if we just look at the accounting, yes, it's important, right? That's the greed-based system that needs to be verified, because no one trusts you because everyone's trying to make a buck off of you, right? That's what the greed-based system requires. But if you talk about the relationship-based system, then it's something different. It's how can we really have a genuine relationship and discussion about the things that are hurting our community, so that we can build a system and a tool to kind of start dealing with that. So again, there's got to be balance here, because we can go way too far into the into that greed-based system and just look at the numbers and just look at performance and just look at, you know, long-term financial objectives and quarterly profit returns and expectations. You know, if we attract that kind of money, that's what they're going to want. But if you're working with mission-driven investors, you know, they want more. You know, so, you know, we can put that aside. I had an investor come to me and she said, Dave, you know, I know you're really concerned about your loss rate and the reputation of your organization, and we're happy with the return that we're getting on the money that we have with you. He said, but, you know, she sat me down and she said, but listen, we and the other investors that are part of this would be happy with a 0% return. So let me say it a little more clearly. Another group within our group of investors would be happy with a negative return. Right? She said, so what I'm telling you is I want you to take more risk with your lenders. And I just about fell out of my chair. Right? I was like, in my head, I was thinking, lady, you're nuts. Like, we're taking so much risk right now. You don't even know. But she was serious, and she made good on that promise in terms of investing more money in us. Because, you know, basically she said, but, you know, before we do that, like, we want to take some of our friends around to see what you're doing and the people that you're serving. So I said, well, how's, you know, 3 days, 700 miles and 25 entrepreneurs sound to you? And I said, we're down for that. Let's go. So we took a 3-day tour and they loved it. And these are people that have done work in Africa and South America and other parts of the world. So they weren't fazed by this. And we really want to see this. We really want to see what people need. Senator Inouye said something similar to me when I was doing policy work. He said, you know, Dave, these tribal leaders, they always want to take me to see their fancy new buildings and their new casino, or actually, I don't know if we had casinos back then. Inouye's passed away now, but he said they want to show me their new shiny thing. And I tell them all the time, I don't want to see that, right? I want to see the honey buckets, right? If you're up in, if you know Alaska, you know what that is. But he says, I want to see the things that are the worst so that I could come back and advocate for you. And so we have those allies out there. They want to know the stories that people have, and but we need to do our part. We need to be able to say, this is what we have, this is what we need, and this is what we want to build, and we need your support. And if someone comes and says, you know, from a greed-based system, well, this is what we can offer you, the most powerful thing is to say, you know what, we don't need that. And we're going to work with this other group over here because they're closer to what we need. So, sorry, I can go on about this.
No, I'm really excited about that because I feel like from an entrepreneur's perspective, from Native entrepreneurs' perspective, you know, our experience with lending and with borrowing money isn't positive, right? We've done the payday loans, we've done the financing with credit cards, we've done the auto loans, the personal auto loans, and been through the ringer with the creditors and the banks calling and you know, all of that. And so we're sort of at a point right now where it's like, you know, I don't want anything to do as a Native entrepreneur. I don't want anything to do with borrowing money for my business. I want to figure out how to do it on my own. But that can only go so far. Once you get to the point where if you look at your projections and you see, I have to grow. If I'm going to grow, I have to hire somebody to help me, or I have to get, you know, I have to purchase a new vehicle. I have to purchase assets, or I have to move into a brick and mortar space where I have to pay, you know, monthly rent and monthly, sorry, something popped up, monthly rent and other expenses. And so, you know, in order to do that, you have to look at what options do I have for borrowing money. And I'm really excited that, and I agree with you that the tide is turning toward more relationship-based lending. We might not be there yet, but I feel like, you know, investors who are looking to sacrifice the return on investment for their money and say, well, you know, let's tie some lending with some grants. And so to give these entrepreneurs a head start, I've heard that as one of the options. And if that's the direction that we're going, you know, I can just imagine the opportunities that are going to be available for folks. And, you know, all you have to do is keep that in mind and pay attention to what your numbers are. And it's a very hopeful message for me to share with entrepreneurs. So let's go ahead and take a look at the poll results, which I think is what was just sent to me, but I X'd out of it. Heather, is there a way that you can send that to me again?
I'm going to put it in the chat window. I'm working on it now because for whatever reasons, it's not showing the right results in the public share. So I apologize for that. I'll have them up in a flash.
Okay. So just to kind of, actually, if there are any other questions, maybe we could open up the questions from the audience. Does anybody have any questions? You can either just put it in the chat room or raise your hand and unmute yourself. Okay, so it looks like we do have one of the poll results, which is, does your organization have or business have experience using debt? And so 50% say yes, they regularly use debt. 21% they have considered using debt, and 29% have prefer not to. So again, I think that's pretty common that, you know, most people are using debt, but there's also a high number who prefer not to use debt.
Yeah, that'd be a good question to kind of get into in kind of one of the Change Labs, you know, lunch and learns or whatnot, and saying what does that mean, right? Like of the half folks that have used debt, what kind of debt is that? How happy were you with that experience, and what do you think would make it a better experience? Or they might say, look, I'm perfectly happy with it. It went really well. For the 29%, you know, almost 30% that say I haven't or I prefer not to use debt. What's behind that? You know, I mean, those are the kinds of discussions that could really help establish what Change Labs kinship lending might look like going forward if you were to get more money or do more in that space. Oh, and we got another question that came up, right? Do you want to read it, Jess?
Yeah, we had asked another question about if you could access a business loan with terms that are favorable to your business. And what we mean by that is that you know, the payments that you would be making are fit into your cash flow analysis. And about 29% say they don't need any funding, and about 44% need 50,000 or less, and then there's about 28% that need 100,000 to 100 million, or to 1 million.
Yes, so this also, right? This basically tells you if an investor comes to Change Lab and say, hey, we've got a bunch of money that we can put into this, what kind of product would you offer your tribal members or community members? You'd say, well, you know, the biggest need right now is for between $500,000 and $50,000. Even though there's 14% that could use $500,000 to $1 million, maybe that's something that, what is it called? BIDF or Navajo Nation CDFI could handle, but you could really focus on kind of that small sector. I mean, it's really, oh, and look, this next question the next question really kind of helps us here too. I mean, read that one. That's really good.
Yeah. So most people arrived at that number just by guessing. 71% people guessed about the number. Only 14% say they're working with an accountant. And 14% say they're aware of their operating costs. So again, it does kind of reinforce what we were talking about. And that's what we find as well. People just, you know, this is the hardest part of operating a business, is looking at the numbers. But I'm also really hopeful because, like you mentioned, there's a lot of more technical assistance providers. There's people out there that can help you. And you might seem like a lost case and have so many personal issues with your finances and that are mixed in with your business finances. I just want to tell everybody that that's the norm.
Oh, yeah.
That's totally, you know, you're not the only one. Most people are in that situation. And so when they get started, they're sort of, you know, somewhat embarrassed or not sure what, you know, how to deal with a certain issue because it's wrapped up in personal issues. But again, you know, once we start looking down and piecing it out, it works out. And the smallest business could have a great bookkeeping system put in place.
Yeah, everyone goes through that. And I think one of the big lessons for me was, I started out, working kind of the nonprofit area on policy issues. And then I went to go work for a big bank, and, it was the biggest bank, right? And in terms of secondary market. And same thing, I worked for a tribe, which was considered, one of the most progressive tribes. But then you get in there and like, oh my gosh, their systems are just as fragile as, the smallest business. It requires maintenance. It requires that, especially for small businesses, that you've already got your blood, sweat, and tears into the business. Why not throw an accountant in there too? Have them sweat it out with you a little bit.
Right.
Because everyone, I mean, everyone is going through this. We had a guy that came to us, and he talked to me about what he was doing, and then I said, well, talk to me about who's doing your accounting. What do your numbers look like? What were your sales, last quarter or whatever? And he was just confused. He's like, I don't even know what that means. What are you asking me? Same thing with the jeweler that we work with. I said, I need to see, financial statements, and I want to see kind of what. I asked her something about her balance sheet, and she said, "What's a balance sheet?" And she had been through a small business incubator, so I was like, "Wait, what? How do you not know what a balance sheet is?" But so what we walked through it, we talked through it, we got them some advisement. And the first guy came back to me. It took him 2 years, but 2 years later, he came back to my office and he said, look, here's my marketing plan, here's my business plan, here's my financial statements, here's my tax records, and here's my projections. And I was like, whoa, where'd this come from? He said, well, I listened to what you talked to me about. I got with my brother, who's an engineer. He's been helping me. I got a business coach, and I got an accountant, and we put it all together. And what he was telling me, what he knew intuitively, is that his business is doing really well. Like, I can't keep my inventory stocked, right? I'm really sought after. I'm doing this thing at the National Museum. I got asked to go to Paris Fashion Week, this, that, and the other. So he knew he was doing well. He just couldn't show me on paper how well he was doing. Mm-hmm. So I just said, I can't help you. My underwriter doesn't know what to do with a good story about the last event that you did. He needs to see your information on paper. But he was really struggling. He just, he even he did a little blog post, and with these little cartoons that an artist friend of his did. And it says, I was used to being an artist. What I wasn't good at was being a business person. And he's got this really cute little thing. And at the end of it, he says, this road that I'm on, it's not like being in the city where you have, traffic signals and lanes and curbs and guardrails, and all kinds of signs to tell you what direction you should go. He said it's like a res road. It's bumpy, it's dirty, there's potholes. When it rains, you can't get through. He said, but you got to think about it like at the end of that road, Shema, she's waiting for you. She cooked a meal for you. She can't wait to see you. He said, so you have to take that road. You have to go down that road because there's something good at the end of it. And so he's been doing really, really well. And I think pretty much all of the businesses that we work with have kind of had that same kind of grit. Just like, I'm doing this for my people. I'm doing this for my community. There was a guy who took over a business that he just, it was a non-union owner from Canada. He could care less about the community. The guy was just asking us, can we get some of our employees just to kind of some basic phrases in Navajo and Hopi? So when we go serve an elder, we can ask them, do you need anything? Are you comfortable? Do you need your medication? And the owner just wouldn't do it. And so it took him a few years, but he took over the business, and now he employs all Navajos, all Hopis. And he's a real, he's really there for the community. Yeah, he's making good money. The business is doing well, but it's about, how do we, there's always going to be challenges. How do we overcome them? And a lot of times it's just like, I'm here for a good purpose. I'm here to do this thing. And I know there's a lot of things I don't know, but I'm going to get the help to get through it. And you just got to ask. You got to be able to ask. And having change labs right there, just go ask the question, please. Because I guarantee you, even if they don't know, they could connect you with someone who does. And yeah, I'm really talking like at a revival or something. Oh, you tell I'm a preacher's kid?
Thanks, Dave.
Right.
So just to kind of summarize, what would a Navajo banking system look like? I think we've talked about how currently our lending situation looks a little bit more payday lenders and predatory lenders than what we'd really like to envision, which is a robust lending institution where small businesses and entrepreneurs can be invested in. And I think that we've, talked about the responsibility of entrepreneurs, but also what banks are looking at right now and what are the things they can do. First, we do need more banks on the reservation serving our people, but also we need to look more at how to create products that are more relationship based and more toward what the community needs versus the regulatory environment where, a certain ROI needs to be achieved in our communities, because we know that that hasn't worked historically, and going forward, even if entrepreneurs were interested in lending and did have, correct financial statements, what is the bank's responsibility to serving the community and being able to actually provide those investments? And that's really a question about what are they willing to do? What is their appetite to invest in our communities? So what I want to do before we close is just kind of open it up for questions. Again, if anybody has a question or would like to make a comment, we certainly would like people to join the conversation. So if we don't have any questions or comments,
we got some real veterans on the phone here, on the call here. Can we pick on some people? Because there's a lot of knowledge in this room.
Well, I saw Derek come on.
Oh, there he is. Okay.
Mm-hmm.
Reach it, brother.
Hey, can you hear me?
Yep, we can hear you,
Okay.
Derek.
Okay, great. Well, good presentation, and just thinking through, what could be a Navajo banking system and what would it look like. There's many models out there, and so when I listen today, I'm reminded of the BDIF. I'm reminded of credit services. I'm reminded of the CDFIs and all the banks. And I think one of the big constraints that I see in the banking environment is just the regulatory challenges. As a former banker, a bank is insured by the Office of Comptroller Currency. They have a relationship with the Federal Reserve, and so they have to follow their requirements. And the biggest challenge for a regulated licensed institution is the collateral, and that's always the big hurdle to get through. And so one of the notions that I've had over the years, and I've talked to people, but and maybe that's the CDFI, or maybe that's the Bekehojon CDFI. It's basically a non-bank type of system, and so it's kind of a hybrid of maybe the sponsorship of a tribe and a financial institution, and a private concern. And so, but some of the biggest challenges really is the collateral. And so that's why in my work as the chairman of the board for the National Center, one of the biggest voids is inadequate credit support, as the term goes. And so how do you achieve that credit support? Well, that's the loan guarantee portion, and so, but it's a big mess out there. If you look at those entities that provide loan guarantees, the BIA, for example, USDA, SBA, DOE, they still can't get their hands around, how to do a loan guarantee. And so all the issues that we talked about today lend itself. And so, one of the things, and I also sit on the board for Native American Bank. Native American Bank, and I think there's someone on here from the bank, but NAB, feels that they're probably the #1 provider of loan guarantees in any country. And that today, that's probably, if you can get that issue addressed, then that would perhaps create more capital to Indian country, to deal with the credit support and lack of collateral. But on the other side, and I was talking to Key Bank the other day about this whole notion. And so when you look at Indian country, depending on the size, it's really hard to determine, what are the markets and how defined are they? And so we clearly have a huge market in payday loans. I see a lot of vehicles outside the trading posts, title loans, ponds, and so that's a big market. How do you create something? How do you create a product to achieve that? And then you have kind of like the middle sector, the small businesses. And so one of the things that I thought of in this study here is, what did it take for, like, for example, the Burger King out there, or the Denny's, or the hotels? What are some of the lessons learned from them? I haven't had time to really talk to them. I know they struggled, the Mikes and Michael Nelson, who created the True Value. I'd be curious about their stories, that could, provide some information on, successes. And, credit card is a big area. And so, I'm just kind of rambling here, but, I'm reminded of a bunch of different examples, and, how do we bring that together? And I say we because, I got involved and I got my MBA, and my goal for getting my MBA was how to bring Wall Street, if you will, to Indian country. And so in this case, how do you bring Wall Street to Navajo? And so, there's many different formulas, and I think, I'll end here, but I think the way to address that is by more discussion, more players, not only from the private sector, but, I think we have to have some conversations with our leadership, our elected leadership, and what that means. That lends itself to some policy reform. We have to talk to the businesses about getting ready. The PPP and the EIDL and all those other things. If those programs fell flat, it did not benefit Navajo. And the reason for that, in my opinion, is that for those that are eligible for a payroll protection program loan, they just did not have the documentation to support, the requirements. And so, so if those businesses were ready, we could have had a lot more capital, basically, that could come to Navajo. So I'm just saying, I like what I'm hearing, more discussion and more education, and so and then lessons learned. So I'll stop there, but I appreciate what you're doing, and thank you, Jessica and Dave as well. So yeah.
Thanks, Derek. I want to sort of agree with you on looking at the lessons learned from some of the larger loan deals that have been done on the reservation. But I also think that a piece of the conversation that we need to have with with creditors and with investors or potential investors, or those that want to do investment on the reservation, is a conversation around the return on investment that's expected from our communities. And if you look at the larger picture, we know that our communities have been, sort of the source of a lot of extractive activity that has fueled our economy in the southwestern part of the United States, both with resource extraction and with the border towns on a smaller scale. And those investments have gone into, Dave mentioned how the biggest banks invested in more mining operations, casinos, those large scale investments that really have fallen flat as well in terms of providing and a way to support small businesses and to grow a local economy. And so that's, I feel like, a part of the conversation that we also need to have is, if you are interested in investing in our communities, you have to look at this from a certain perspective and not from the perspective that has historically been taken, in which you're looking at a certain return on investment to be achieved. So I think that's also part of the discussion. And also think that when you're looking at SBA programs and the Bureau of Indian Affairs and their loan guarantee program, it also, you know, it's a step in the right direction that's been taken, but it's also a sticky situation that's happened with the loan guarantee programs. Even when those loans have defaulted and the guarantor stepped in and paid it, there's never really a resolution for that deal. You know, it hasn't served to support an ecosystem for investment. All it's done is, you know, these banks have gotten a pat on the back for doing a deal in Indian country. BIA has gotten a pat on the back for getting money into the communities. But once that deal is done, once they've left the community, there's really, you know, there's not much that's really added to the community in terms of additional lending or supporting an industry for investment in our communities. And I think that that's what we're really trying to move toward when we look at more relationship-based lending. And it's small loans, you know, it's $5,000, it's $10,000, but that's similar to what we're trying to do with Change Labs. That's what's going to build a system. You know, we start from there and we begin to build with entrepreneurs who are solopreneurs, and then they're looking to grow their business. So they borrow a little bit more, they hire, they grow their business. So I think that that's sort of, you know, for me, that's where the real meat of the discussion is.
And that's true. And to me, it's this environment, it's all about risk and how do you mitigate it. You know, as a banker, you look at, okay, I have these, you identify the key risk factors, and then you say, how do I mitigate that? And so, you know, there's risk in all situations, you know, artists, you know, the burrito lady, so to speak, and then the flea market folks, you know, the independent contractors, the small businesses. And so, you know, I guess one of the things that it's really hard to qualify and quantify, but, you know, I think there needs to be more, well, I suggest more investment from our nation. You know, I was just looking at, for example, the audit that's going through the nation to be approved. If you look at that, there's $5.2 billion of investment sitting on the Navajo Nation books. And I've always been an advocate of local investment. Why do we have billions of dollars in stocks and bonds, you know, with Fortune 500 companies? And why can't we have some of that invested locally? And so, you know, and you don't have to me, if you take that approach, you can lessen some of the restrictions. Mm-hmm. And so I hear, well, it's too risky. Well, to me, you know, buying the stock market is no better, no worse than investing in good deals on Navajo of all sizes. And so I've always been a proponent of that. And I think if you look at, you know, back in the 70s and 80s, that was one of the thoughts of it. A rainy day fund, but also a fund that could be levered. And so, but I think that's something really something to really think about. And so, but you're right, we do need more financial institutions. We do need more folks that really want to assess the risk. And so, you know, I'm basically coming from the days where, remember when you and I were part of the Quejo CDFI, I thought the portfolio was pretty decent. The problem is that there was not enough capital coming in to help support the growth of the portfolio. And so some of the other things that I think we need to think about is just diversification. The COVID-19, in my opinion, has really raised the issue of diversification. You know, the mainstays, gaming and extractive industries are in fact impacted by the recession. So, you know, how do you look at other markets where Navajo business people can get into, and how do you finance those businesses to enter those markets. You know, so there's tourism, there's food services, there's hospitality, you know, and then, you know, if you look at some of what a lot of small communities are doing, they're trying to bring in job creators. You know, I don't know what that is. You know, I look at the Rio Rancho model. Rio Rancho was started because they want to be the call center of New Mexico. And so is there something that perhaps can be done on Navajo so that you can generate jobs and then, you know, go from there? And then I'll end with one of the things that I see that is not happening on Navajo is our big businesses, our enterprises, and our government giving preference to our Navajo businesses. Let's take a shot in these Navajo businesses. They have services, let's use them. You know, it's too easy, in my opinion, to say, well, you know, I have a relationship with a vendor from Phoenix. I'll give them a call. Hey, you know, call them up. You know, I need 10,000 widgets. You know, boom, it's done. Well, we need to go back and say, okay, leaders, you know, elected and business leaders, instead of making that easy call, go to the Navajo source list or go ask around and say, who is Navajo that can provide this service, this product? We're not doing that to the fullest extent possible. Without having those types of relationships, our Navajo businesses are struggling. And so a lot of them are established, but they're having to go off Navajo to sell their service. When in fact, if you look at, for example, the Navajo budget that they're going to be dealing with, if you look at it in its totality, it's roughly 1.8 billion. That's the annual budget. Now, if you add to that the budget for, you know, the enterprises, and if you look at the budget for IHS, and you look at the budget for BIA, top line revenue, you know, that's available for expenditures. You're probably looking at about $5 billion of just governmental revenues that are appropriated. Now, if you add to that, you know, the commerce from the business, it's pretty sizable. And so if you look at I guess I'll call it the gross Navajo product. You know, I know we talk about that, but it's probably annually 8 to 10 billion. I'm just guessing here, but so how do we steer our economy in that direction? How do we steer our Navajo businesses to take part in that and be a component in that system? So, but I'll end there. There's a lot more we can talk about, but you know, this discussion is certainly raising all kinds of issues that we can think about, but I'll stop, but thank you. Go ahead.
Thanks, Derek. I think that's a great point that I'm really glad that you're able to, in your head, calculate the economic opportunity, because I think we all see it and talk about it and feel it, but it's difficult to calculate that. So certainly a lot of opportunity around there. And wouldn't it be the greatest thing if our tribal governments became the biggest mission-driven lending institutions and investors into our own businesses on the reservation based on that economic opportunity? That to me is exactly what a Navajo banking system would look like, is taking that $5.2 billion sitting with the tribe and investing that into small businesses and supporting them in the way that you laid it out. So I think that's awesome. Really quickly, we have one question from Alicia Murphy that says, do the growth of and strength of existing and potential businesses for the much needed partnerships in the financial sector, we need data to track the sales or employment growth for all sectors, basic and non-basic. We need data. It starts with reporting our current situation. So I think that's, again, just reinforcing the need to get the data that outlines what the economic opportunity is, and which is the reason why we need to start as entrepreneurs, keeping our own books, doing our taxes, reporting to the appropriate authorities. There has to be a certain level of administrative burden on businesses so that we have an idea of what's going on with them and how and where they're struggling and how they can help. And again, data from governmental organizations or nonprofits, similar to what we're doing with the Doing Business report, is much needed, but it does take funds and resources. So we're very happy with this research so far. I think that it's really given us the ability to talk about our work in a way where we have the data that we can show versus just talking about it anecdotally. And so we can, speak for the need for additional data and how it's been able to help Change Labs with our mission. So with that, I think that we'll wrap up. I do want to thank Dave Castillo for coming on and talking with me today about this issue, and our team, Raymar and Hannah, for going all over the reservation and getting the data for us. And, the Change Lab staff who works really hard to put all this together. So I just want to thank everybody. Heather, did you have anything else to add?
We have just one more thing that we'd like to share with this audience before we lose you all. So Hannah, if you could go on to the next slide. First and foremost, just a reminder that we have one more webinar in this series that we'll be hosting next Tuesday, and it's going to look at the challenges to growing a business on Navajo Nation. It's going to feature Colin Bradley, a prominent Navajo lawyer who represents Navajo small businesses, and also Sherilee Francis from Native Women Entrepreneurs of Arizona. And also, before we lose you, there are 2 ways that we're asking this audience to support Native entrepreneurs. So first and foremost, Change Labs at the moment is hosting a petition to reclaim some of the federal buildings that are occupying prime real estate in our communities. In the photo, in the slide in front of you, is one of the biggest federal buildings in Tuba City that's been sitting vacant for several years, and directly across from it are several more, and behind it are several more even. If you are willing to support this movement, please go to nativestartup.org/BIA cleanup and put your signature on our petition. It would mean a lot to get your help to secure support and asking Congress to clean up these buildings that they've left in our communities. And then secondly, buy Native. To Derek's point, there's not enough of that going on, and there are a wealth of Native small businesses in rural communities. They just don't always have the luxury of being able to get online and market themselves. So Change Labs has put together a tool, resrising.org, that has more than 500 Native-owned businesses, primarily in tribal communities on there. So when you're next looking for a caterer for a COVID event, does that even exist? Or you're looking for somebody to buy jewelry from, Christmas shopping, birthday gifts, please do check out resrising.org and look for a Native entrepreneur to support. And with that, we'd like to thank you all for joining us for today's session, What Could a Navajo Banking System Look Like? And we hope to see you at the next event. Ahiyaha.